president and his administration in efforts to save Social Security and help save recipients. But with the recession looming, many say it's a bad idea. As with the Old Age and Survivors Insurance Trust Fund depletion it faces 2023 reports, the president has suggested that some are calling for a sweeping 4-point plan to bolster funds in the trust. The plan would also help the $22 trillion funding shortage shown in the 2023 Trustees Report if the federal government cannot fix the shortage. It could result in benefits cutting up to 24% of retirees beginning in 2033, while some of Biden's proposed changes will affect the high earners and company executives. Those who have retirement savings plan on potentially hiring than the average American. Some will affect the middle and low-income wage earners. Analysts have also noted that it will especially affect those who may rely on Social Security benefits in the future. Currently, any earned income below $160,000 is subject to a payroll tax. Earnings exceeding that amount are not subject to any taxes. Biden plans to tax the earned income above $400,000, leaving wages above $160,000 up to $400,000 untaxed. Each year, Social Security benefits are addressed and based on inflation adjusted through a cost of living allowance. Currently, the administration uses this to calculate the COLA, but this doesn't necessarily reflect the lifestyle and expenses of retired people. Shifting COLA calculations to figures tied to the Consumer Price Index for the elderly won't even solve the problem for Social Security running out of money. It could just put more money into the pockets of retired Americans who need it the most. The Primary Insurance Trust Fund is an amount indicating that how much Americans will receive in Social Security benefits. It all depends on your age, when you began claiming benefits, and your average index monthly earnings. Increasing the primary insurance amount for Americans ages 72 to 82 would help those experiencing and also healthcare. The low-wage earners receive a special minimum benefit regardless of how much they made while they worked. In 2023, a lifetime low working earner would receive $12,000 in Social Security benefits or $1,000 a month. Biden intends to increase the minimum benefit to 125% of the federal poverty level for an individual. An example in 2023 is someone receiving a special minimum benefit will receive $1,500 per month with the boost. However, any Social Security overall plan would require the bipartisan support in Washington, and so far Democrats and Republicans haven't been able to see eye to eye in some ways. But fears of a recession have mounted since the Federal Reserve began hiking interest rates in early 2022. Because according to a chief of economists, although the latest gross domestic product figures indicated growth, a recession could still be imminent. With rampant inflation, Americans are grappling with wages that struggle to keep up with the rising cost of living and things like this. But just about 28% of people say they approve of a fourth stimulus check.
We've all seen content creators.
Do you agree with this, everybody? Tell me in the comments down below. So will you be receiving a stimulus check this month? I know that's the question that many of you want to be answered. Listen to this. You are eligible to receive more stimulus checks from a new federal program. This is really great because it's going to help so many people that are financially struggling due to the crisis. So remember folks, on this channel, I always do my very best in providing you with the most up-to-date and reliable stimulus check and Social Security news. So it really means a lot to me if you could subscribe to the channel.
An executive order to ensure that the federal government puts you, the American people, at the front of the line and for first in everything we do. I'm directing 17 agencies here to focus on more than 30 key areas to make it easier to apply for services and benefits that they're entitled to, they paid for, theirs, their government.
Now back to the breaking news, folks. The Restaurant Meals program also covers people with disabilities and people experiencing homelessness. The program is most widely available in the Gas Rebate Act of 2022. It would provide a monthly rebate during any month when the national average cost of gas is $4 or more. The rebate would last through the end of 2022 and would total $100 per adult and per dependent for single filers earning less than $75,000 or joint filers earning less than $150,000. It would phase out at higher income levels, with single filers getting no rebate once their income topped $80,000. And married joint filers losing the rebate with an income of $160,000 or higher. Now, state plans exist in certain locations because in early June, for example, North Carolina Democrats put forth a plan to send money to residents via check or debit card. The money would come in the form of a $200 rebate to North Carolina residents and would be available by October 1st to anyone who is 18 or over. Now, this is a bit different from the past stimulus checks that have come from the federal government because those were able to be deposited into people's bank accounts if they provided the information, and while these payments would come in the form of a debit card or check only. So the child tax credit in 2022 will return to conditions offered by the IRS before the American Rescue Plan expanded it. The amount of the credit is smaller and eligibility is more. Generally, if your refund is delayed more than 45 days, the IRS will pay interest on the total. Starting July 1st, the interest increases from 4 to 5%, compounded daily. There are numerous reasons the agency has fallen behind, including being short-staffed, still needing to catch up from 2020's backlog, and accounting for tax changes made in crisis stimulus legislation. Additionally, it may take longer for agents to process paper returns and those with errors, which they need to do by hand. Before the filing season even began, IRS Commissioner Chuck Reddick told lawmakers that the IRS predicted that returns would be delayed this year, but the backlog should be cleared by the end of the year. So you may be able to receive money from the IRS if you don't receive your return by the mandated due date. As returns pile up at the IRS, millions of taxpayers are experiencing refund delays beyond the standard 21-day turnaround for electronically filed returns with a direct deposit refund. If you do not receive your refund within 45 days of filing, the IRS is obligated to pay you interest for each additional day. The second quarter return is an acceptable interest return of 4%, and interest compounds daily. It is happening. An economic crisis is on the way. Millions of Americans, including the low-income, Social Security and SNAP beneficiaries, are expected to see their payments delayed, and that's all starting in just a few weeks. Top economists are already warning all Americans to prepare financially for this disaster, which will last them months. The United States is also weeks away from being unable to pay its bills, an event that will likely be accompanied by broad and negative financial consequences for American households, that is. Among the ramifications of a debt ceiling standoff, any payment issued by the federal government, like Social Security, Medicare, tax refunds, military paychecks, and ample others, may be delayed. As an illustration, if the U.S. has just 80 or 90 cents for every dollar it owes, it will be forced to defer to certain payments. There are many unknowns, for example, the length of any delay or if the government will prioritize certain payments. The U.S. has never been in this situation, and the government hasn't issued a public roadmap outlining its response. The U.S. is in this situation due to a political standoff tied to the debt limit. This ceiling is the amount of money the United States is authorized to borrow to pay its bills. The nation runs a budget deficit, meaning it spends more than it makes more. It must therefore borrow money to meet its obligations. Congress periodically raises or temporarily suspends the debt ceiling to avoid the other scenario, which would be a default on the national debt and other federal payments. The country hit a debt ceiling, currently $30 trillion in January. Since then, the U.S. Department of Treasury has been able to shift money around and delay the so-called X date, the day on which the federal government can no longer pay its bills in full. That date may be as soon as June 1st, but a political impasse between Democrats and Republicans means the deal has remained elusive. If the U.S. reaches the X date without a debt ceiling deal, it will be the first time in U.S. history that the federal government has intentionally reneged on the financial promises. This is where the hypotheticals around who gets paid and when starts to come